there, traders and investors. Bennett Tyndall with TradingAnalysis.com. Today is Tuesday, February 23rd, and this is your weekly public market update. I do apologize for not having a video out to you all last week. For those of you who are not aware, I'm actually in Texas, and we were met with, well, some rather unusual weather. We had about 5 days of sub-freezing temperatures, had about a half an inch of ice, followed by somewhere around a foot of snow, which is extremely unusual for this area. Our power grid was overloaded. We weren't able to produce the power we needed. The state went into rolling blackouts, which actually turned into complete power outages for many, and others didn't have any power outages at all. So it was an extremely confusing time. Wholesale energy prices went from around $50 per megawatt to as high as $9,000 plus. In fact, any customers on wholesale providers were warned Sunday evening leading into this that, hey, you might want to find another provider. Unfortunately, nobody was taking new customers, so anyone who was stuck with a non-fixed rate plan, well, they ended up paying anywhere from $1 to $3 per kilowatt. Generally, they're paying 5 cents a kilowatt, which is really a great price, but given the possible variances and times such as the one we found ourselves in this past week, I guess it's not the best option. So anyways, long story short, doing well. Many people had it a lot worse than I did, so I'm grateful to be back online and be getting back into the hard right edge of the charts. So let's dive into it. As you all know, if you've been following my work, if you're subscribed to our YouTube channel, or perhaps you watch our Wednesday live stream show, you'll know I personally have been looking for a possible blow-off top to complete 5 waves originating off of the March 2020 COVID sell-off low. And we are seeing an interesting move lower. So far, we've sold off to the tune of about 3.5% peak to trough in the S&P, while in the NASDAQ and technology, the selling has been significantly more aggressive, which is a little bit concerning given the fact that tech and the NASDAQ have really led this recovery effort. Okay, now we are faced with a alternate interpretation which gives us still a corrective pullback, but one that will end much sooner than the preferred interpretation and will defend the October 30th low. So what we have here is this. Zooming in to the October 30th low, let's focus in on price action here. So what we have is this. From the October 30th low, we began a motive impulsive 5-wave journey. And what's really incredible about this sequence is there are not only Fibonacci relationships among the various portions and segments of this advance that we can utilize to help substantiate the count, but there are also channeling techniques that Elliott Wave teaches to help confirm support areas as well as resistance areas. So the first channeling technique is this. When you complete your waves 1, 2, and 3, you can draw what I call the 1, 3, 2 trend channel, which is used to help identify 4th wave support. That looks like this. You take a trend line from wave 1 through the top of wave 3. You then project your parallel trend line through the bottom of wave 2, and that is often where you're going to see an attempt at support in the 4th wave position. You'll notice we poked just below it, and then we moved higher. Once you complete your 4th wave and you anchor that 4th wave, you can then draw what's referred to as the 243 trend channel, and your 243 trend channel takes you from the low of 2 through the low of 4, and then your parallel trend line goes over the top of wave 3. That, when used in combination with upside fib targets, can often give you a 5th wave stopping point. You'll notice price action met the upper boundaries of the trend channel on February 8th, consolidated, broke through it into the 16th, and here we are moving lower. At the very minimum, I anticipate a 3-wave pullback. We have support into 36.94. If that breaks, you're going to be looking at your more traditional retracement levels of this entire advance off the October 30th low. If for some reason we do defend today's market bottom and continue higher, we could entertain the idea that this is an ABC pullback, turning it into simply a 3-wave correction, which means we resolve higher. The issue with suggesting that this is simply a three-wave correction is this. Elliott wave teaches us that often your C wave's relationship to A is going to be unfolding at a less aggressive angle of ascent or descent, depending on where you're counting the counter trend move. So what that means is your A wave should be the more aggressive wave compared to the C wave. Not only was C more aggressive in price or in time, but it was also significantly more aggressive in price. So if we were to take that reverse and take a look at our C wave and bring it up there to where A started, you'll notice it was much greater and it unfolded at a much more rapid pace. That gave us about a 200% relationship of C compared to A, which is really unusual. Not out of the question, but highly unusual. So if we do not defend today's low, I'm going to be looking for a further move to the downside, a counter trend rally back, and then continuation lower. One of the other issues with calling this a completed three-wave move is this. If we take a look at the NDX, technology and the NDX has been the leading sector and index. We have since violated the January 29th low. So we can no longer look at this as wave 1 and 2 of green wave 5. This now has to be either the start of the higher degree correction, or we're looking at some very unusual patterns such as the one you see here. So as it stands, if we don't defend the market bottom from today, the 23rd, I will be looking for continuation lower south of 3,800 in the S&P, then a counter trend rally back, and that's when the higher conviction short trade will set up. That's it for me today. I hope you enjoyed the video. Don't forget to check us out tomorrow morning, 8:45 Eastern on Todd Gordon's YouTube channel. Myself, Terry, Todd, maybe even Alex if he is not busy. Of course, Alex has his own show every Thursday, 9 Eastern. Check that out as well on our YouTube page. So I hope to see you guys there tomorrow morning. You can check us out at tradinganalysis.com. We'll see what the market brings, and I'll see you all next week. Same place, same time. Take care.